micron Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider micron.
Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Great to have you with us here at ausbiz. So, further signs overnight that investors are unwinding this year's everything rally, with tech stocks, gold, crypto assets all under pressure. The first results from Wall Street's Magnificent Seven appear to have unnerved investors. The S&P 500 and Nasdaq failed to regain any of the tech-triggered losses from the previous session. However, the Dow managed to close higher, supported by stronger than expected US GDP data. And small caps rose as investors sought value away from the mega caps. Alphabet shares fell for a second straight day following its lackluster earnings, while Microsoft and Nvidia shares also continued their descent. However, Tesla managed to reverse its trend. IBM shares shook off the tech gloom and surged after it beat estimates for second quarter revenue and raised the annual growth forecast for its software business as it sees solid bookings for its AI business. American Airlines rose despite cutting its annual profit forecast, highlighting excess capacity in the domestic market that's undermined the industry's pricing power. And Southwest Airlines also climbed after saying it would implement changes on its aircraft, including offering seats with extra legroom. Shares in carmaker Ford slumped after its second quarter adjusted profit missed estimates by a large margin. Edwards Life Sciences tumbled after it missed second quarter revenue estimates. And Lululemon shares have fallen to their lowest level in 4 years on concerns about its forward earnings in the face of slowing demand for activewear. Well, the US economy grew faster than expected in the second quarter, increasing at a 2.8% annualised rate, double the 1.4% growth, the pace in the first quarter. Consumer spending, which accounts for more than two-thirds of the economy, increased at around 2.3% after slowing in the previous quarter, with spending driven by services such as healthcare, housing and utilities. Other data showing weekly initial jobless claims fell more than expected to 235,000, indicating a cooling but still solid labour market. And longer dated US Treasury yields were mostly lower after the sell-off in equities fueled a safe haven bid for bonds, while the solid economic growth data failed to shift expectations for a rate cut from the Fed Reserve. The yield on the 10-year Treasury note falling to 4.25% and the 2-year rising slightly to 4.44%. And the US dollar trimmed losses against the yen and euro, while the Aussie is at 65.4 US cents. Well, plenty happening certainly on Wall Street at the moment to get across it all, and certainly also what's going on at a macro level. John Blank, he is the Chief Equity Strategist and Economist at Zacks. He joins us now. John, very good to catch up with you again. There is a lot of action at the moment, not the least, of course, what we're seeing in equities at the moment. What have you made of that significant sell-off we've seen from tech?
Andrew, let's just talk about year-to-date returns, because it's a good backdrop for my thinking that it's just a mean reversion to some historical levels of annual returns for a lot of different indices. So Nasdaq 15% up on the year, S&P 13% up on the year, Dow Jones 6 to 7% up on the year, and the big rotation to small caps, if we use the Russell 2000, it's up 10% on the year. So 10%, 13%, 15%, 6 or 7%. So really not a lot of difference. So the rotation has kind of rationalized the annual returns perspective on a style class, basis in this basic rotation, which makes a lot of sense, Andrew, if you just think about it as an asset class decision.
Nonetheless, are there some broader questions being asked, particularly in terms of that AI thematic?
Yeah, I think so. I think people are getting a little more skeptical about AI is because they're realizing the profits aren't going to be there for multiple years. So I think that that is a part of the sell-off that's taking down the the mega caps, because a lot of the story that's built around their AI businesses, their CapEx boom, which we've all heard about, isn't going to pay off in terms of profits for a long, long time. So they've got other businesses that are going to work fine until then, but that doesn't incrementally improve their outlook. And I think it's basically just taking the water off the boil a little bit in this respect.
Now, of course, also got some significant data. We've got the PCE out tomorrow, your time. We had the latest read on GDP. And of course, the bigger picture too, John, what's going on at a political level in the States? How is that all influencing the investor at the moment?
Well, Andrew, I think there's been a wave of relief with Kamala Harris stepping forward for the DNC nomination, and it has lifted the mood, particularly on younger people across the country, and particularly on women. So, and particularly on the African American people in the United States. So, generally, I think it's been wholly positive to see also outside the United States people getting more, relieved that we're going to probably have a government that's going to carry on with existing outreach and internationalism. So in general, I think it's been wholly positive in the last, few days for this whole situation to play out. And I think, Biden did the right thing. It's tough to argue at this point, looking at the poll numbers that are coming in, that he didn't understand the situation the country was in, and he just basically stepped aside. So very great example of leadership on his part. And does it play a role in the stock market? Generally, Andrew, the answer is no. That it gets people excited, it creates some sentiment. But, as we talked about the returns, those are, historical returns. They're standard returns for a year in front of an election. And I doubt it makes a bit of difference to most people on Wall Street.
Well, John, let's get to some stocks that you're focused on at the moment. Well, of course, we're just talking about AI, and that has been a boon for stocks such as Micron. In fact, it's doubled essentially in the past year. It reported last month, in fact. What are you seeing there?
Yeah, Micron is just an amazing stock. I mean, I have it pulled up here, Andrew, and what I'm looking at is a $107 a share bid on a stock that is now $122 billion in market cap stock. So it's not a $1 trillion stock, but an amazing ascent from, you could have bought this at $50 a share in early 2023. So this was a double your money stock. So the question is, does it cool off from here? Well, it was at $140 not too long ago, so it already has. We've already seen a 25% haircut on this stock. Where does it go from here? In our system, we got a number 2 rank, which means the estimate revisions are going up. People are seeing a 25% rise in estimate revision, Andrew. So you can get another big run out of a stock like this. So if I look at a chart like this, I say it goes back to 140 in the next run and maybe beyond that, because I think, these data centers are not just the only story of AI. It's the entire fabric of the U.S. economy that's being built out during COVID and now after COVID by these types of companies.
Well, that's what you're seeing with Micron. Second stock we're going to take a look at is Arista Networks. So this is communication components.
Yeah, okay, so Arista Networks, Andrew, is connecting all of these different groups. So this is data centers and cloud computing environments that are connected in a networking solution. So you want to connect everything together, you got to go on to Arista Networks and talk to them. So what do we have here? $100 billion market cap stock, again, just like Micron. Got a $314 share price. If you bought this stock in January of 2023, 18 months ago, it was $100 a share. You triple your money on this thing. So is there a play left to be made at this point? We've got to pull back. We got a target price at 396. We're at 314. Again, you got a 33% gain on a stock like this, and we do have a number 1 rank, which says the estimate revisions are going up. They're not going up as much as Micron. So the difference here is Micron's getting a lot of earnings lift, and Arista is getting not as much. But if you ask me where this stock is going, you look at a chart like this, it's a giant bubble in many ways. But, for a short-term trading perspective, Andrew, you got to love a stock like this once it starts to bottom and turn up again.
All right, short-term, so you need to get onto that one. Finally, third stock, we're going to take a look at Shopify. Talk us through this.
Shopify is up in Canada, Andrew.
Yep.
They were $160 a share at the end of 2022, and then they got sold off, beat up, shorted down into the 30s, And again, in early 2023, you could have bought this stock for $40. Now it's about $60 now. We had a target price of 70. So again, this is probably the least upside in a backward-looking perspective, but probably the safest one, because our fair value look on a stock like this is still 150 on a long-term basis. So here's a double your money stock, A for growth, A for momentum, number 2 rank, because you are getting estimate revisions. So what do these people do? They basically show you how to, if you're a business, how to be an online business and do all kinds of work for you in order to do that. So, you know, it's got a nice chart pattern. It's probably, you know, not too overpriced, even though I look at it $1.23 a share when it's, you know, $60. It's still a 40, 50, 60 PE stock. But in this type of space with an A for growth in the tech stocks, you're going to have to pay up for it. So I wouldn't really care too much about the value store on a stock like this, and I would care more about where the direction of the trend is, and it's up. And I can think you can get, you know, basically $70, $80 out of a $60 stock like this.
There's 3 stocks right there to take a look at. John, just before we go, quickly, expectations of a Fed cut in September. Is it a certainty?
Yeah, well, CME futures, I looked at this morning, 85% chance, Andrew, of a 25 basis point cut in September, and the other 15% is for a 50 basis point cut. So the tenor of that debate has gone into the direction of some traders taking big bets on a big cut in September. 15% of people now thinking there's going to be an even bigger cut. So that would shock markets. But, you know, now we're out of the game of arguing whether there is or is not going to be one, at least from the trader perspective. They're all in. And the only issue is whether the Fed goes big and goes 50 at the beginning to really shock markets.
Yeah, fascinating. Not too far away either. John, great to get across it all. Thanks for joining us from Zacks.
Ben Eder.
Quick check of where we're likely to open locally. We're looking to, shrug off some of those steep losses we saw yesterday. SPY futures, they're up 0.4%. Stay with us because the open is a couple of minutes away.